Subscribe to our YouTube channel for in-depth interviews of India Inc. and press the bell icon so that you do not miss our updates.
Hello and welcome to Nirmal, ladies and gentlemen. I'm Hiral Dadia. We have with us Jakob Friis Sørensen, MD at APM Terminals, Pipavav, joining in. Jakob, welcome to the show and pleasure to speak to you. My first question coming to you is, uh, clearly if you go to see a lot of businesses that were impacted on the back of COVID, uh, the business that you are into as well was impacted when there were complete lockdowns across. How has the transition been in this entire year if you have to look at 2020 to now?
Yeah. Well, I was so fortunate, in fact, to be in the port at the time of the lockdown back in about a year ago on March, I believe it was March 25th, 2020. And we were sitting in the port and spent some time when after Prime Minister Modi had locked down India, we had the management team getting together, and we spent the most of the evening and into the early mornings um, to activate our contingency plans. And it was quite clear to us that foremost we needed to keep our people safe. And as you also saw, following the weeks and months after the lockdown, a lot of laborer and drivers and crane operators were actually migrating across India home to their villages. And we were lucky that that did not happen in Pipavav, because we fairly easily we evacuated. Sorry, we evac. I hope you can edit this, but I'm trying to say we activated our contingency plan. We had PPEs ready. We had safety gear, and we had all the masks and what we needed to really assure our front end staff that they were safe. Because at this point in time last year, nobody really knew what was COVID and how dangerous this disease was. And the biggest fear, uh, uh, um, Hiral, the biggest fear was in fact that it was going to come ashore from the ships. And we also had strict restrictions from crew getting ashore. And obviously we had Indian customs and we had other port authorities working. Um, and all that, in fact, it was a little bit of a miracle, but I think it took us less than 24 hours to have all these things aligned so that we could get started. And we operated uninterrupted since then. I think another factor is that we have a link with railways. So we have PRCL, Pipavav Rail Corporation, which link us to the main Western Railway grid. And having to evacuate containers and other cargoes by rail made us a lot less dependent on drivers.
Mm,
So that was another blessing in disguise.
right. So Jakob,
From there we just learned from experience, and then again as it evolved over the year of 2020, we became basically the only port at some point in time that was still up and running. Other ports faced a lot of congestion and lack of drivers, and CFSs was really congested at some point in time, but we kept on running. And while the container volumes were seen to be dropping because shipping lines took out their ships, we
mm,
saw that fertilizer and a lot of our other cargoes, liquid LPG and other bulk cargoes, were actually surging.
wow. So Jakob, if you could just help me understand on the back of COVID, by how much was business impacted? I mean, as you mentioned that shipping lines were shutting down, by how much was your capacity reduced?
Yeah, so I think it's fair to say that our container volumes went down nearly 20%. And for a port, we are rather stationary, right? We cannot move our assets around just like shipping lines can move ships around. But what we did then was we took a very good look at all our costs, and this was again a good opportunity to both look at our variable costs, which are a little bit easier to handle. So when your volumes goes down, your costs go down as well. But we took also a really deep dive into our fixed costs, and it was quite healthy for the business that we took this And in some instances, we identified savings opportunities that we would probably not have been finding if it wasn't for the COVID. As you would also see, and as you know, we are a share listed company, we have actually on the bottom line not been nearly as much affected, and we have continued to pay out dividend to our shareholders as well in 2020. And of course, I can't say for the full year. We have the last final quarter of the financial year 2021 coming up, but we have kept our margins, and we have been consistently giving dividend back to our shareholders.
Absolutely. So in India, do you think that the supply demand situation is reaching some sort of equilibrium now?
I think there's a lot of restructuring going on. The supply and demand, it depends what kind of goods you are talking about. As I said, we saw bulk volumes, and this is everything from coal, limestone that is used for cement production. We saw LPG, we saw fertilizer, which is of course used by the agriculture sector. We saw all these kind of commodities actually surging. And in some cases, I think it was because of prudence that people ordered more to make sure they wouldn't run out of stock so that they could continue their business. If you look at the containerized goods, then import of consumer goods have also had a surge. And I think that is because the consumer habits have changed a lot in 2020. A lot of people have been working from home. Many people have been restricted from going to cinemas, from going to vacations or going to restaurants. And instead, they have spent their money on buying online. And that has really changed the demand picture a little bit, so that companies like Amazon and others, they have really had to reorder and to fulfill their supply chains in a much larger scale to respond to this shift in consumer demand.
Right.
And finally, I think we have a sector here. We have the Indian exporters, and they have probably been hurt because first they shut down, first they let their workforce go home, then they restarted up again, and they had to resupply their supply chains. And at that point in time, it would have been difficult to get raw materials. And now finally, when they are ready and up and running, as you're probably aware, at the moment we are facing structurally a lack of empty containers, not only in India but all over Asia. And that is because, again, what I just described before, it has not only happened in India, it's happened everywhere. So in Europe and in the United States, there's a severe lack of warehouse capacity, and that means that shipping containers are being used for temporary storage. And that again means they don't come back to Asia where they're needed for more exports.
Wow. So, is this one of the major reasons why we are seeing container shortages right now, and hence the rates have gone up?
I think so. It is really an unexpected and a little bit unpredicted change in the demand and supply globally, as well as, for example, China has been very fast in getting back to new normal and pushing out exports at a time where maybe the shipping lines were not really deploying full capacity. And it takes a little bit of time to redeploy a ship. Once you had laid up a ship and you send back the crew, it is not as fast as to redeploy an airline, where you can maybe in a couple of days, you can get 2 captains and a couple of stewards and stewardesses, and then you can fly again. If you want to redeploy a container vessel, you need to have a much larger crew. The crew has to be vaccinated. They need to get in the right position. The ship needs to get remobilized, and that takes a few months. Apart from that, then there's the whole story about empty containers, which I described before. Demand and supply is not balanced globally, and there's still for months going to be bottlenecks in that sector.
Right. And then from here on, overall, usually when you see the months of January and February, I was reading that there is a normal trend where ports don't witness a spike because of Chinese New Year. However, this year we saw a dramatic increase in terms of the traffic. What was the reason for that?
We didn't celebrate Chinese New Year. We just continued working because what has happened is that, as I described, there was a backlog of containers in many ports, and the period which would normally be that spike and then a valley, people continued to work and they cleared off the backlog, and that meant that this year 2021, January, February, and Chinese New Year was indeed an unusual cargo flow year.
Right. And then overall from here on, if you have to see the different segments of business, which segments are actually showing growth and which segments have a major impact where we are seeing a slowdown?
Yeah, luckily, the sectors that are really hit bad by COVID, and still is, if you go to, all over the world, but if you go to Europe and United States, where you have the big consumer population, that is, of course, the service industries. That is the entertainment, leisure, restaurants, and so on. What that means is that sectors, or those sectors, are not that much depending on the physical transportation of cargo. So actually, we are seeing that the shipping lines are having a fantastic year with the overall research of cargo volumes and continued strong demands. The cargoes that they're moving is both finished goods, it is also raw materials and components that goes into manufacturing, and then it ends up to become finished goods. And those sectors are really not directly hit by COVID. It is over in the service sector, in a little bit more softer sectors, where you have the real impact.
Okay. And in terms of different segments of business for Pipavav, which segment is showing traction?
We are standing in front of something that I have called a game changer many times. And that is that the dedicated freight corridor in India will go live. We have a Western corridor that is scheduled to be from Maharashtra all the way up to the north. And then we have the Eastern one that also goes to the East Coast from the north. And in Pipavav, we are so lucky that in a few months, we will be able to tap in directly to that. From Ahmedabad and north, the sector, the phase one is almost complete. And here we have double track capability for double stack, so the two containers on top of each other, electrified rail tracks, which also enables the trains to go faster. So we really have a multiple fold injection of more rail capacity to and from the port. And that is exciting because it means we will be able to accommodate more volume. It means we will be able to have a much more reliable arrival and departure from the port. It means again that our customers and the customer's customer, the shipping lines and their manufacturers, that they can plan their supply chain in a much more reliable way. And that is in fact helping them a lot in the scenario I just described a few minutes back, that in a time where you can't predict your supply chain, where you cannot get raw materials or finished goods because your consumers are buying in a different pattern, it means a lot for the shipping patterns that the supply chain can be more reliable. And that is exactly what I believe that the DFC will mean for India. So I think it will mean in the short run that we will move cargo from road to rail, and we will see that the railway network will be much better utilized, but because that extra capacity, where we will not be competing with passenger trains on the railway network. In the little bit longer run, I think the companies will realize this benefit, and they will start organizing their supply chains according to scheduled trains. And I do believe that this will help India in the long run to move up on the logistics reliability index, and it will help companies' supply chain. It will help India to reduce logistic costs, and it'll help us to be more competitive in the global marketplace.
Right. So as you mentioned that, there will be a move happening from roads to rails, but how long do you think it will take to see this transition actually happening?
All changes takes time. Hiral, it's not only in India, it's everywhere that change takes time. But
Right.
I think it'll be in phases. And what is really important to say here is that it's the whole ecosystem which will benefit. So the losers will not really be the truck companies and the truck drivers, because they will be needed in the near last mile and first mile, transporting the containers to and from ICD to the factories and so forth. Uh, at the same time as we see the railway network being developed, of course, you can also see that the road network is being constructed and developed. And around Pipavav, we have the coastal highway to Bhavnagar, and we have also west over towards Diu. These toll roads, in fact, are opening up, and that means that uh, both the rail network and the trucks are benefiting. So the whole ecosystem is going to complement each other and thrive from each other's growth pictures. And that is really good. So I think, again, here it's all winners. It's going to be more competitive logistics wise. It's going to be lower costs, lower unit costs, and it's going to make us, enable us all to grow the cake.
Right. And then, as you mentioned, that you're looking to, at rail connectivity in a huge way, do you think Pipavav will be able to increase its service to northern markets to rail connectivity? And number two, will the turnaround time also reduce?
Yes, both questions is a yes, because number one, as I said, we will tap into the freight corridor in a couple of months, whereas terminals in South Gujarat like Hazira and also JNPT will take a few more years before the dedicated freight corridor is finalized. So we will have a head start, and we will take full advantage of that in Pipavav in order to see the volume growth for the northern markets that is 100% by rail. Then the second question, yes, again, I think we will get into scheduled trains. We are already doing trains from Pipavav to Dadri in 48 hours. And that is, sorry, I just have a distraction here. But we are already doing trains from Pipavav to Dadri in 48 hours, and that is indeed going to improve. Otherwise, it would have taken 4 or 5 days just a few months ago.
Right. So overall, we spoke about where the container handling charges uh, have increased by the shipping lines. Now, as a port operator, does anything change with regards to the economics on that front? Have rates gone up for you guys as well?
I'm just relocating the laptop. I hope that's okay with you.
Yeah, yeah.
We have for sure seen the shipping lines increasing their ocean freight, and that has gone up, as you say, many times in some instances. And that is a very much a typical market supply and demand. And the shipping lines will probably post some very good financial results for last year. Um, I can also remember years when they have posted big losses. So it's good to be shipping line at these days here. To be a port, as I said, we're a little bit more long-term, more fixed assets and more fixed costs related. But what we do, we do have a chance now to review our tariff as well. And to answer your question, we took a tariff increase of about 5.6% last year,
Mhm.
and we are going to do something similar this year as well. Other terminals have increased their tariff with double digits, and I think sometimes that's a little bit hard for the customers to swallow. I feel we are doing it in a nice manner, even though we know that our customers are making a lot of money at the moment. Um, I think we are taking also a professional view on this, and that means, as I said, just as we had a very good cost review ongoing last year, obviously we are also looking at our services and our revenue streams. Um, we have enhanced the transit time. We have reduced the dwell time. We don't have containers stuck in the port. So we don't make money on storage, but therefore we would like to actually capitalize on the speed and the good service that we give to our customers. So yes, we will do some tariff adjustments upwards in the coming months to come here in 2021.
Right. And overall, Jakob, if you could just help me understand what's the current annual cargo handling capacity, uh, and we can take both into consideration right now as well. It's the non-container business as well as the container business.
Yeah. So the nominal capacity of Pipavav port, container-wise, is 1.3 million TEUs per annum. Last year in 2020, we did somewhere around 800. 2019, we did 900,000. I think this year is going to be very much like 2019 in terms of container volumes.
Yeah.
When we hit the 10 lakh TUs, then that's a really good sign. And we are taking some steps actually to continue to grow in that respect. So what we are planning to do is to invest in crane capacity upgrade, where we would be able to reach further across on larger ships. We want to be able to reach 23 container rows across the ship, and that upgrade will give us the capacity or capability to handle the same size of ships and they can do in Mundra and in JNPT. And in that connection, we also want to expand our container yard capacity to 1.5 million TEUs. When you're looking at our bulk capacity, um, what we're doing at the moment is we are expanding our warehouse where we do the evacuation of fertilizer. So we are expanding with another 10,000 square meter warehouse. And we take the opportunity here on top of the roof to put a solar plant as well, so that we can get some sustainable and renewable green energy as well to run the electric trains. And as I said again, with the DFC going live, I expect that the velocity will go up, so we can evacuate much faster than we have been able to do with the conventional railway connectivity we've had thus far. So we saw actually in January our bulk volumes are nearing 500,000 tons, and it is we have a full nominal capacity of about 4 million metric tons per annum of non-container. So when I say that in January we did 500,000, you can do the math and say that was a really good month. But as I said again, it is a little bit of a nominal capacity, because the moment we get better and better and faster at evacuating, obviously our capacity increase. And that's exactly what I expect will happen with the DFC. So it's also not only bulk, it's not only containers, but also bulk that we can evacuate by rail. So we evacuate fertilizer that is being put into bags and put into rail cars. We receive build up vehicles for export by rail. We have just commissioned a railway siting where we can have LPG on rail, that we can evacuate the liquid petroleum gas by rail as well. So it's really a multitude of different kind of commodities that we can evacuate by rail.
Right. So with all of this, Jakob, what would your outlook be in terms of your top line margins and bottom line for FY21 and 22?
Yeah, as I said, I like to be known to be reliable. And as we say to our shareholders, we aim to keep our margins. I lifted a little bit on the fact that we are going to spend some money. We're going to upgrade our crane capabilities, and we are going to upgrade our container yards and our readiness for the DFC, and we are expanding our warehousing. So we have some capital expenditures that we are doing, but we are doing that, of course, with the outlook that our revenues will grow and our volumes will grow as well. So the net sum of that is that I expect to be a reliable, provide reliable returns to our investors in the same tune as we've done so far. That means with margins that are near 60%, and that means that we continue to pay out maximum dividend to the shareholders.
Right. And very lastly, with regards to expansion as well, what is the, excuse me, what's your plan with regards to where funding the expansion goes? Are we looking to raise money, or do you think will it all be from internal accruals?
well, we are in the lucky situation, Hiral, that we have quite some good retained earnings in GPPL, and if you look at our balance sheet, we actually have no debts. So we can take from the saving pig, or we can go out and these days you can actually go out and borrow money at very reasonable rates. So I think in any case, whatever we choose to do, maybe a combination, but we won't have a capital problem itself. The big challenge is in fact to plan this whole thing so that when we do the expansions, when we do the capability expansions, when we change the cranes, when we add more capacity, we want to do that without interrupting the day-to-day operations.
Absolutely, and that's
So
something.
yeah.
Go on.
So that's a little bit of a skill to plan. It's a little bit like changing the wheel on the bicycle while you're still riding it, but that's nevertheless what we are attempting to do, so that we have uninterrupted operations, we serve our customers, and we expand so that tomorrow we can offer them even more service capabilities.
Absolutely. I think that's something that everyone's looking forward to as well. Thank you, Jakob, for joining us on the show. Pleasure to speak to you. Great insights about the business, and hoping to visit the port pretty soon. I hope you enjoyed the conversation as well.
I did, and I hope you will come and see the port, because there's many things that we would like to show. As I said, we take very good care of our people, and we have actually some amazing CSR programs in the nearby villages as well, which obviously we are quite proud of, but it is part of creating that environment where people in the near communities are supporting the port.
Absolutely. Good
Thank
luck
you very much for having me. I hope I can come back again.
100%. We'll see you soon. Stay safe.
Same to you.